The First Tycoon is the biography of Cornelius Vanderbilt, the man who made his fortune in railroads and shipping and at one time was considered the world's richest man. Speaking of Vanderbilt, his biographer Stiles wrote, he did have his beliefs, chiefly in his own genius. Hello, I'm Ramesh Damani, welcoming you back to a brand new episode of Wizards of the Street. Belief in free markets is, of course, a cornerstone of investing genius. My guest today has an MBA from Vanderbilt University. He's done stints at State Street Global Advisors and spent 17 years at Goldman Sachs in a variety of key positions. Since 2017, he is the founder and MD of White Oak Capital Management with over $6 billion in assets under management. Please help me welcome Prashant Khemka. Prashant, welcome to our show.
Thank you, Ramesh. It's a pleasure to be here.
Prashant, I want to go back to your early years. What got you interested in the stock market?
Certainly. So as a child, Rameshji, I grew up in a middle-class Marwadi family. My father,
Like I did too.
my father had a store, a garment store, and all our savings, my grandfather's as well, were invested in stock market. Some, odd lots, minimum lots, received an IPO allocation, some 150 of those. So while we were, as I said, maybe middle class, we were surrounded, my friends and neighbors and relatives were mostly far wealthier. So always was wondering how to make money and more money. So I was reading books like Think and Grow Rich.
By
and
Napoleon
whatnot.
Rich, yes.
Yes, absolutely. So around in 1985, July 1985, my great-grandmother had passed away. And as was customary that time, extended family would get together for 12 days as a ritual. And everyone was talking about how they're making a killing in equities.
That was the Rajiv Gandhi bull market.
Rajiv Gandhi's bull market, yeah. So they doubled, quadrupled in Tata Ordinary, Tata Locomotive and Century and No Sill and Baroda Rayon and so on. So I felt like a eureka moment. This is how I can double my money every year.
And make your family wealthy.
Absolutely. And
But
how 5,000 can grow to a crorepati.
Right. Well, a lot of people influenced you in your life. I know your granddad was a big influence in your life. Goldman Sachs clearly was a great influence in your life. What are the enduring lessons you learned from some of the people who've helped you in your journey to become the MD of White Oak?
No, absolutely. It is, the lessons learned from my interactions with various people over this since, as you said, from grandfather, for example, learned that it's impossible to predict the market. In college, you talked about Vanderbilt. Really, first time I realized that it's a cash flow based analysis that's most powerful in determining value.
Not necessarily earnings or EV to EBITDA.
Absolutely. So until then, I was using all those price to work, price to earnings, and so on. But that was the revelation in at Vanderbilt in the mid-90s when I realized and have completely switched to cash flow based approach. Then under my boss Herb Ehlers in 2000 at Goldman, really learned how to conduct professional research. Until then, it was more of a retail investor style. Then as someone who started GSAM in India, learned how to build teams and establish strong investment culture. Had the opportunity to invest globally in developed markets at US growth equity team at Goldman, and also in managing the emerging markets business. So that exposed me to business models and business environment in so many countries around the world, from Mexico to Korea.
A lot of emerging markets.
Absolutely. And here at White Oak, for the first time, the experience of owning and running a business has been tremendously insightful, because so far was only investing in businesses without necessarily appreciating what goes on in the promoters or owners mind as they're running the businesses. So it has been all along.
I understand that. Your granddad, of course, taught you that you cannot predict the future. Good advice. But he also made you do summaries of balance sheets?
Yeah, absolutely. So that's how, his way of teaching me. He'll, when good old days, you remember, annual reports would come. Even if you have one share of any company, the annual reports would come, physical copy. So he'll ask me always to summarize any new annual report that will come. He'll say, summarize for me, what is the management saying? What are the numbers looking like? And all that. So that was very, very helpful lesson in those days.
But despite the summary, in the 92 bull market, the so-called Harshad Mehta bull market, you had a pretty bad ending, didn't you?
Absolutely. So we were not just myself, but two of my friends. We borrowed money, a lakh rupees each, which was quite a lot of money
Princely
for
sum, yeah.
college students at the time, and they entrusted it to me because they thought I was a investing genius, and we ultimately ended up losing all the money, more or less all the money.
Fair enough, but did that discourage you from equities? Because here's a somewhat of a thief's den that you get Ford certificate. Why not stick to retail, which is what your family calling was?
Well, I think the fascination with markets was too strong to have been discouraged by losses. I mean, since then I've had other substantial losses as well in almost every bubble bust, because as I've mentioned before, I don't try to time at any time the markets. I'm fully invested
At all times,
at
okay.
all times throughout. So there were substantial losses, but I've never lost a night's sleep on those losses, and never thought of, because I don't know of anything else to do since I've been hooked on to the
No plan
markets.
B.
No plan B. Until the age of 13, I wanted to be captain of Indian cricket team, but since then, I've been hooked to the equities.
I think we all do. Prashant, you went to America to get an MBA from Vanderbilt University, storied university. Why Vanderbilt and what did you learn there?
Certainly. So see, why Vanderbilt? Initially, obviously, the uh, at that time didn't have the money to pay, first of all,
Of
for an
course.
MBA education. So the primary selection criteria, to be honest, was only colleges that would give me scholarship. Yeah. And then within that set, look for which one had the best finance education. So Vanderbilt ranked very high. The faculty at Vanderbilt in finance was very strong, and they offered me full scholarship. So complete, it's a private institution. All my tuition was waived off, and even was given an opportunity to work with a professor at twice the regular pay, which helped me pay off my living expenses as well. And in fact, the professor then recommended me for the first job at State Street, which I received, and was the beginning of my career.
Which is lovely, of course, that you worked for a university that made the first tycoon in business, and now you follow tycoons for a living. Uh, you worked at State Street, and then you were recruited by Goldman Sachs. Not an easy job to get for an immigrant. How were you recruited, and tell me about your years at Goldman Sachs.
Definite. So there was a alumni again from alum from Vanderbilt University who was working at Goldman, who referred me to this very high performing team, U.S. growth equity team based out of Tampa, Florida, founded by Herb Ehlers. Goldman had acquired Liberty Asset Management that was founded by Herb Ehlers. So he forwarded my CV to him. I went to interview as was customary. I had a dozen odd rounds of interviews, and was very fortunate to have been offered that position. And later on, and I still stay in very close touch with Herb. In a couple of weeks' time, would be having our usual annual catch up. And when I asked him why did he hire me, he told me basically because of your enthusiasm for investing, and the
The
fact that you've
passion.
been absolutely the passion and enthusiasm, and the fact that you've been investing since very early days, and it was very apparent in talking to you that's what you want to do for the rest of your life, and that was the key reason that he brought me on.
That's fascinating. But what does it Goldman teach you? I mean, this is a very hard-driven work culture. Sometimes you work 18 hours a day. Sometimes you don't have any weekends. Was there any work-life balance that you got out there? What and how did you learn to invest at Goldman?
Certainly. So see, Goldman is a giant organization with various divisions, and the different divisions have their own, style and all.
Fiefdoms.
Fortunately, at in Goldman Sachs Asset Management, each team ran like a boutique of its own, and there was no enforced approach top down, which is very good. And so, in this U.S. growth equity team under Herb's leadership, he ran it as his ship, his boutique firm, which he had founded. So I learned a lot, as I said, the professional research, how to conduct management meetings, how to source for ideas, present and convince to the broader team, then how to manage portfolios when I was given those responsibilities. Um, and from Herb in particular, I learned how to build strong teams, keep them motivated all the time, um, and how to be a very meritocratic leader, which has then helped me over time as I built my own teams over there. So the most important lesson during the early Goldman days were to observe Herb and his leadership style. Yeah? And then in later years, as I
Emulate
established,
that.
sorry,
Later years emulate that.
emulate that as well. And so, as I got the opportunity to build the GSAM India team initially, and then now White Oak team, so those observations were very helpful.
But tell me, 98, 2000, maybe you joined Goldman Sachs at the peak of some dot-com bubble, and you were running US equities at that time, maybe for a decade or so. At that time, did you look at the Indian markets or you only focused on American markets at that time?
No, no, absolutely. My daytime job was managing clients' money, investing that in US. But in the evening, when I would come back home, I'd log in and follow and be investing in Indian markets, particularly while I was at State Street. Yeah, because at Goldman, it took me some time to get all the approvals and compliance approvals and permissions from all the way till the top to have the brokerage account year, which I did get in 2003, 2004 timeframe. But I continuously followed the Indian markets all throughout.
That's fascinating. You're at the high octane market of the US. It bounced back from the dot-com bubble at some point. Uh, India still, by 99, 2000, you barely had one company listed on NASDAQ, which was Infosys. What was your interest in, what kept your heart beating about India?
Or India, certainly. So, see, always was sure I was coming back to India and was starting an investment management firm in India. So that was never
You
in
knew
doubt.
that when you give up the dream of being a cricket captain, that's what you want to
Very
do.
much so. So never ever doubted that. So I had to maintain that connect, and not just had to maintain. That was a passionate connect. That would have been there in any case.
What we'll do is we'll take a break. When we come back, we'll chat some more about your returns and how to profit from the Indian stock market with Prashant Khemka of White Oak. And welcome back to all of you on Wizards of the Street. I'm still with Prashant Khemka of White Oak Capital. Prashant, we're talking about returns and your love for Indian equities. At some point, you threw your hat in the ring. You quit a steady and good paycheck at Goldman Sachs and decided to hang your hat. Was India the only choice, or would you want to run US dedicated money at that time? What was your thought process in, I guess, 2017?
So it was a big step after 19 years in corporate world. But as I said, I was very clear had to do it at some point, and 2017 ended up being that time. Um, India, I felt like was rightly or wrongly confidence why it is more like a bird in hand and something that I felt very confident about generating top ranking or peer group leading performance, which is needed initially to be able to build a investment management business. Down the road, I knew that at some point in time, we'll start, as we did earlier this year, an emerging market strategy, which I used to lead at Goldman as well.
Yes.
And so, but initially to begin with, also the resources required to begin with to start an India team could be, like we started with 9 people investment team, but to do proper service to managing an EM fund or a multi-regional fund, especially the way we invest very bottom up, you need at least 20 plus people team in my view. So which we have right now, nearly a 40-member team. So to begin with, could not have afforded or taken would not be judicious to build such a large team on day one.
Who were your early investors in your India fund?
So early investors, fortunately, were some of the investors that I had met with for long while I was at Goldman. But for some reason or another, they never gave me money at Goldman. But as soon as, to my very pleasant surprise, as soon as I started on my own, they were very willing and forthcoming to engage and fortunately trust us with the money. That was
That's
most
a
amazing.
happy coincidence. But
Very amazing.
Prashant, you had a certain investment philosophy guiding you at Goldman based on past history. You now start White Oak. You have a certain personal philosophy. What were the differences and similarity in the investing approach that you followed at Goldman and that you're following at White Oak?
Actually, Ramesh, as I was saying, one thing very good about Goldman Sachs Asset Management was there was no uniform, top-down philosophy or process imposed upon everyone.
Boutique.
It was every team leader was, allowed the room space to build their own philosophy and process on their team and implement that. So that's when I came to India, it was very much like a boutique, no interference from the US. Particularly when you're small, there is no interference. Obviously, when you grow larger, New York wants to know what's happening and you're not going to screw it up and all that. But it was, fortunate in that regard. So I could design and construct the team and the team's philosophy and process and build a investment culture as I saw appropriate.
Prashant, a lot of people, fund managers, are disdainful of macro, the top-down approach. You called the piece macro shacro, but still, I'm going to quiz you on a few of the things. The first thing is the markets, at least till a few days ago, seemed optimistic that the inflation problem is solved, inflation numbers are coming down, the Fed slowed the pace of increase. What is your view?
I do think on this very particular aspect of inflation, that the worst is behind us. I do believe that the inflation last couple of years was sparked by the supply chain disruptions that followed COVID. So, in March 2020, everyone was worried about demand destruction, which would cause supply glut. That's why
And the other
spot
thing
oil went to
happened.
negative, and the
Right.
opposite happened
Opposite happened, yeah.
few months later. So it was a supply disruption which continued for much longer because of COVID zero policy of China, as well as then another shock, supply shock, which was Russia invasion of Ukraine. And now gradually it is limping back to normalcy.
So
And
inflation will come down.
yes.
But quickly in a summary, will globalization come back or has that also been permanently derailed?
No, I think globalization is very much there for good, and it is maybe a bit of a speed breaker in the interim. But for India, it's actually can be a very positive game changer of sorts because the companies worldwide are very keen to diversify their supply chains.
From China. So
From
it's the India
excessive,
plus one.
absolutely, from excessive dependence on China, they want to diversify. India has the opportunity and it should grab it with both hands, which it is doing so, but I think there's always room to do a lot more. It's an
So
opportunity
Apple
that
does
comes.
5,000 crores of iPhone sales. That telling sign to you?
That is certainly, from India's perspective, a very big positive. The opportunity size in front of us is compared to that is like tens of times, if not hundreds of times bigger if you look at the manufacturing sector as a whole.
So a services-led model that for some time had romantic feelings in India is not necessarily appropriate. We do need manufacturing at the end of the
No, no,
day.
sir. It's like let, as they say, every flower bloom or thousands of flowers bloom. Services would continue to chug along very strongly, but we can also have manufacturing. That's been a missing piece, something where we haven't really shown up over the past several decades. It is the opportunity that we should not miss.
Prashant, after 20 years, one thing I know you're not missing is an investment philosophy. If I were to ask you to summarize your investment philosophy on how you pick stocks, and give me an example, historical if you may, about something you enjoyed picking in India or something that you learned from picking badly in India, can you share that with us?
So it's very simple, and as I tell when clients ask me, there's no silver bullet in investing. It's like the marathon has had 26 miles for thousands of years, and still you have to run 26 miles, and nothing really creative you can do about it. So in investing, we believe outsized returns are earned by investing in sound businesses or great businesses at attractive valuation. So the two key attributes we are looking for is strong business and attractive value. What we consider as great business are ones that have these attributes of superior returns on incremental capital, so going forward capital, a scalability, which is to do with growth, and management should be good both in execution and governance. When you have the opportunity for cash flow generation and scalability, you need management to execute. And when you find companies with all these attributes, you have to make sure you buy at a logically attractive
Price.
valuation price to make outsized returns from them.
Can you give me
So
an example?
So over the years,
Historically, anyway.
historically, so many of the names that we currently own are difficult to talk about just from a restriction perspective. But they're without naming specific names, if I were to talk about. So financial sectors or IT services sector. IT services, if I take as an example, from time to time, they get written off by the market. One of the things that market has for the last decade or so believed is that IT services sector is an X growth sector in India, because they think of or X growth sector because NASSCOM and IT companies, they guide in dollar terms or constant currency terms. We are like dollar equivalent.
Yes.
So they talk about 7 to 8% growth. Now, in India, 7 to 8% growth doesn't appeal to anyone.
Doesn't wake
If
up anyone.
if you are less than double digit, you are no growth or slow growth company. But 7 to 8% dollar
Dollar
growth
terms is
equates to low double digit to low teens kind of rupee growth, right? And you can't label the entire industry as slow growth because it's a trillions of dollar industry with hundreds of or thousands of players. So a good execution machine, which is small or mid-size, even the largest of Indian companies are small or mid-sized by global standards,
will
given the
continue to
size of the pool.
compound.
Yeah, so the compounding possibility is tremendous. Yeah, and then they're available at cash flow based valuations, which are far more attractive than anything else in the market.
Fair enough. There's a movie called Dawn, which I know you like, and there's a very famous dialogue in Dawn which says, "Dawn ko pakadna mushkil hi nahi, namumkin hai." Would you say the same about India right now?
I would say at any point in time, any market, including India, and most specifically India, I would say when it relates to, like, a lot of people talk about Indian markets being overvalued and whatnot. So basically, that's a market timing statement that we'll buy it when it's undervalued. But this has been a common refrain amongst foreign investors and oftentimes amongst Indian investors as well.
And you miss the
that
bus.
and you miss the bus. So in that context, I often say, Don still gets caught in the movie, but to catch the market is not possible.
Yeah, I mean, when you started in 1985, the Sensex was, I guess, under 500.
Absolutely.
Today it's closer to 60,000.
Absolutely.
Prashant, we have some fun normally at the end of the show. We do a rapid fire. So I'm hoping you'll agree to participate in that.
Absolutely.
So when I say to you, Herb Ehlers, what do you say?
Leader and business builder.
If your child asked you to recommend an investment bank to work at today, which bank would you recommend?
Investment bank or investment firm?
Investment firm.
Investment firm, I'll say White Oak if you get hired on the team.
Okay. There's no nepotism there, right? He has to
Only
be
if you get hired by the team.
Okay. The best investment book you've read?
Valuation by Copeland.
Okay. The must-read newspaper magazine in the investment world?
Annual reports.
Okay. That's what your grandfather taught you. If you could invite any two investment professionals and any two cricketers, living or dead, to dinner, who would you invite?
Clearly Kapil Dev and Tendulkar.
Okay. So you remember the 85 World Cup, I think, still.
Absolutely.
Huh? Okay.
And
investment professionals?
investment, well, I'll do it twice with Rakesh ji.
Really? Okay, very well said. Hank Paulson or Manmohan Singh for dinner? Hank Paulson, of course, ran Goldman Sachs.
Unfair to Hank to be put up against Manmohan Singh, but Manmohan Singh.
Okay. The Indian promoter that you really admire?
Radhakishan ji Damani.
Thank you. Indian stocks over 1 year, higher or lower?
Higher.
Estate or inheritance tax, is it likely to come by 2024?
Hope not.
The one sector in India that you're very bullish on over 1 year's time frame?
IT services.
Thanks. My guest is fond of saying investor returns are a function of time in the market rather than timing the market. Well, we can keep debating that, but I know I'm not debating how grateful I am to Prashant for his time today, for stopping by and for chatting with us. Thanks, Prashant. And we'll see you next week on another episode of Wizards of the Street. Bye for now.
Thank you, Ramesh ji. Entirely my pleasure.
Thank you.